So last time I was with everybody, I shared this image on the screen. This is an image of November and December money calendar. Okay, we don't need to get too in-depth on this. If you want my in-depth video on this, just go back a couple weeks and you'll see me talking about November and December. And I was talking about the fact that there is a lot of green, a lot of seasonality on the screen. Now, this doesn't mean right here does not mean that every stock in the universe is scheduled to go higher. In fact, it doesn't mean that at all. What it means is that over the last 10 years, there are certain stocks on here, okay? For instance, going into next week, there's less than 50 that have had a 90% or better historical probability of going up between the months of November and December, okay? A far cry from the thousands of stocks that are out there when you're dealing with 50 or 100. But what I want to talk about today is something more, okay? We also discussed looking at just the indices, how the Dow Jones is slated to go up between now and mid-December. And by the way, I thought what I'd do is show you at least what's happened in the last 2 weeks since we were here just at the middle of October. We've seen about a 3% move in the Dow. I think things are just getting started here for this holiday move that we're seeing. But I want to expand on that a bit here today. So it turns out that starting November and moving from November to April represent the best 6 months of the year. According to Carson data, the period from November to April averages a 7% move. Okay, going from 1950 to 2024, 7% change if you were investing in the S&P 500 on November 1st through the end of April. Okay, 76% of the time, this was higher, and in all periods since 1950. Winning and losing combined was an average percent change of 7%. So we are in that period right now. As we're starting the first trading day in November, so starts the best 6 months of the year. November, December, January, February, March, April. The rest of the patterns you see here, October to March was a 6.6% average change. That was 69.3% of the time. Ryan, pop this up for me. So December through May, 5.3% of the time, and that was a 70.7% chance higher. July through December had a 4.8% average change, 72% higher, and so on and so on and so on. But the top line is the one that we are in, because we are in the top line right now. All right, thank you, Ryan. So if we were to take a look and extrapolate this down to just the stock market on a month-by-month basis, and more importantly, all the way down at the bottom, you will see November and December. November and December together represent the best 2 months of the year. In fact, even January is really such a great quarter where we see average returns in November at 1.61%. The median is over 2%. Average returns in December, 1.59% for the S&P 500 and nearly 2% in December. So when you take the 6 months data, you put all that together, and you take the month-by-month returns and you put that together, and you add that to what I've already been telling you, that the holiday periods, all right, what we talked about just 2 weeks ago, look really good going forward. It just tells us that the moves that we're expecting to see based on history look very bright. And it's really all because of this chart right here. This is the M2 money supply. M2 is basically a broad measure of the money supply tracked by the Fed. And what that includes is circulation of currency, deposits like checking accounts, liquid assets, which are savings deposits, small time deposits, Christmas club accounts, if those still exist, and money market funds. All right, this is all $100,000 or less. for September, which is the most recent data we have now, we've hit a record of $22.2 trillion on M2. Just a lot of money floating out there right now, which is good for the stock market. If we were to take a projection based on everything I've just talked about, it really pushes the fact that we've hit the 38.2% extension, all right, based on our last highs just above 600. And that was back in around summertime. You take a look at the move that we've gotten now. We're at up the 38.2 extension. If we were to move up to 50%, that puts the markets between 700 and 725 for SPY by, I really think 700 is what we're looking at by the end of 2025. So the markets are entering their best 6 months of the year. And this is seasonality. It's trends. But mostly the long-term seasonals are now starting to kick in November, December, and the best 6 months, which is November through April. What about gold? What about silver? What about Bitcoin? Well, for that, I'm going to do a deep dive on Wednesday. All right. Wednesday afternoon, Wednesday evening, I'll be doing a deep dive on hard and soft assets. All right. Hard and soft assets. Come and join me on that. You see that QR code there? Point your phone to the QR code, click on it, and join me as I do a deep dive in precious metals and digital assets.